Hi, I'm Michael Newrock and welcome to the training lesson Stochastic Oscillator. A stochastic oscillator is a momentum indicator comparing the closing price of a security or symbol to its price range over a specific period of time. It's one of the earliest technical oscillators in trading used to predict future market direction. If you're unsure about what I've just said, then don't worry. It's like the RSI, not really important to know exactly how it works, but how it works in relevance to the profiteer system. So stochastic is Greek for random, and in the context of trading, refers to using past actions to forecast a future state. Oscillator refers to repetitive variations up or down the equilibrium position. So we've got a white stochastic line and a blue stochastic line in the profiteer system, and they'll oscillate always, fairly close to each other. And what's really relevant is, like with the moving averages, the white stochastic line needs to be above for a buy and below for a sell. So you'll see these crossover points, just like with the moving averages that I went over in a previous lesson. Now, the indicator shows how the current price compares to the highest and lowest price over the look back period. Typically, the look back is 14 periods. On a daily chart, that's 14 days. On an hourly chart, 14 hours. We've got it customized in the profiteer system to work in harmony with the other indicators, so it's best to leave those settings as is for everything to work, as expected. Overbought and oversold. So typically the stochastic oscillator has been used to find overbought and oversold points in the market. A currency is overbought when the stochastic is above 80 and the currency is oversold if the indicator is below 20. Now we've modified it a little bit in the profiteer system to 85 and 15 for overbought and oversold. But the labels are misleading. Overbought doesn't necessarily mean the price will drop immediately, and oversold doesn't mean the price will rally immediately. Overbought and oversold simply mean the price is trading near the top or bottom of the 14 period range, respectively. These conditions can last for a long time. You might get a bit of a retracement and then for it to continue. But it's really only in the system to provide us with accurate entry points in harmony with all of the other indicators. So when the white stochastic line is above the blue stochastic line, as you can see here, the price is considered to be supported and potentially rising. Okay, so if a trade alert has occurred, even if it's just here, the white has to be above the blue for it to be a valid trade. And when the white stochastic is below the blue stochastic line, the price is considered to be under pressure and potentially falling. So when we get into a sell alert, we want to see the white stochastic below the blue stochastic. And that's pretty much it. Very easy. Again, we're not going to go into the analysis and explanation of the hows and whys of the stochastic oscillator, but all that's really important to know is that when the white stochastic line is above the blue stochastic line, it's valid for a buy. When the white stochastic line is below the blue stochastic line, it's valid for a sell. As always, there's a couple of tasks under this lesson. You can download the lesson for further viewing, or you can just watch it again in the members area anytime. Download the special report that goes with this lesson as well if you want to find out more about stochastic indicator and how it relates with profiteer. And of course, there's a couple of tasks and some FAQs under this lesson as well, plus a link to the specific section in the forum. So feel free to ask questions. Obviously, we all want you to benefit from the profiteer system, and the only way to be able to do that is from understanding the system and experience. So until next time, good trading, live well, and I'll see you soon.